Yo, CPA Strength back again with another ratchet ass accounting practice test. As you can see, it's not so much about all the fancy equipment you have, but just getting going. So this was a lot of fun yesterday. Had a lot of good results, although I guess I started a little earlier yesterday. I don't know. Hey, what up, Dirty Jizzle? Yo. Abdenor, what up, what crackin'? Dang, we got a lot of people in here already. I guess we had fun yesterday. So yeah, I know tests are coming up, everything like that. Tests are coming up. Yo, we got 10 people in chat. This is lit. So, I think there was like 4 more questions of those multiple choice yesterday, but we're gonna move on. We're gonna move on to something else. We're gonna move on to a bunch of journal entries. And now this is where my DC Adler really comes into effect. This is where I feel like I could really help out. And so we're gonna do a bunch of journal entries here. So we're gonna start. We're just going to work our way down through these journal entries. Well, there's like 10 of them. Let's see. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So let's assume that this is a test. This is a test you're taking in accounting class. You're taking your first accounting class. This is going to be your first accounting test coming up. And let's just assume that. What up, I hope? Hey. So it's what's the first thing you're gonna do? Well, you have been watching my videos. I believe Accounting for Beginners 99 or something or so was saying to write DC Adler out on your paper every morning, and some of the common. So you've been writing this, and you've been writing DC Adler every morning. And then when you get to your test, really before you even look at your test, you're gonna have kind of a brain drop and just write down DC Adler real fast, right? I got a pencil today. I like this pencil. I don't know where I got it from. DC Adler. You're gonna write that down. Then you're gonna write, give me some more. Okay. Debit. Credit. So that's why I like putting DC, because it gives you the debit then the credit. Okay, then we're gonna go asset. Lefty sucks. It's a struggle. AD. Draw. Expense, liability, equity, revenue. Now we know that let's just do some common assets right now. Is cash, okay? Accounts receivable, might have spelled that wrong. We're gonna live. We footing to live. Nice, right? Yeah. Draw, we're gonna say withdraw there. Man, you already got the first one? Sebastian smart, bro. Sebastian, you already got the first one. We ain't even supposed to look at the first one yet. But you're writing this down. You already written your DC Adler down, right? We'll say accounts payable. Retained earnings. All right. So we've got this down now. We know they equal. We know that these are in the, if they're going, if these are going up, if these are increasing, these would be, these three, asset, draw, and expense, would be debit if they're increasing. And if liability, equity, revenue are increasing, it would be a credit. So these are increasing on increasing sides. All right. Yeah, I always got to practice for myself, man. Always got to practice for myself. So let's get it in here. All right. So now I just want you to know, I want all of you to have what I have, kind of. That's what I have. All right. Now, Quark invests $12,000 into the business. Okie dokie. Now, so we're just gonna have a little line, trial balance. We're just doing journal entries. Let's see. Professor Quark opens his own company, Electronic Tutorial Services, and completes the following transactions in June. All right. So Quark invests $12,000 into the business. Now I put my line here for debits and credits. Debits on the left, credits on the right. All right, you've got your DC Adler to look at. You just wrote it down. You've got that to look at. Now, Quark invests $12,000 into the business. Hey, good evening. Hello to everybody in here. Watching from the Philippines. That's what's up. I got a lot of viewers from the Philippines. All right, so what do we have here? We have 12,000. We know our debits got to equal credits. We have 12,000 cash coming into the business, increasing into the business. So what would that be? We got to know cash. That's our very first thing, because most journal entries are with cash. So we know cash is an asset. If that is increasing, if cash is increasing, we know that that's a debit. So we're gonna have cash. We're gonna have cash 12,000. All right, and Quark invests now. So we got 12,000 coming in. We got 12,000 coming in into the business. Now, why did the 12,000 come into the business? We got to have a credit for this. So it could really be anything, but investing in your own business would be. Now we got to figure. Now, a good way to figure is you have no idea really. It is to owner's equity or capital, owner's capital. It is. But now a good way why I like to have the DC Adler is because you've already got your cash. That's easy. And so now you just have to figure out, how did we get the cash? Was it an asset? Did we get cash by withdrawing cash? No. Did we get the 12,000 cash by an expense? No, we didn't. Or was it a revenue? No, it wasn't. We didn't do work for it. Do we owe somebody? Do we owe an outside party for the money? No. Equity, owner's equity. Yeah, we own the business and we invested ourselves. It could actually be a loan to the shareholder, but no, it's going to be equity for this purposes. So then it's going to be, we'll say capital, owner's equity. This problem says capital. So that's our journal. That's our journal entry for it. And here's what the there's the answer. There's the answer from the practice test that I got out of the book. So yeah. And of course you have the date it happened. Date it happened. You have the debit over to the left and credit over to the right. Capital Quark, huh? Okay. Let's go for problem number 2 now. We having fun yet? Problem number 2, or on 6-3. Okay. Yeah, buddy. Purchased $1,800 of equipment on account. Alrighty. Okay, we purchased equipment. So we got equipment. Purchased $1,800 of equipment on account. Credit cash and debit accounts payable for this one. Well, let's see. Well, debit inventory, credit trade payable. I like those. Equipment debit, cash right. Let's see. Well, let's just think about this logically here. But purchased $1,800. Is there cash here? Because let's get that out of the way here. But no, because on account means you purchased equipment. So we got equipment into the business, but we're gonna owe somebody later for it. On account would be accounts payable. So we purchased equipment. Let's do that. So what is equipment? Now we have our DC Adler. We could have write accounts receivable. We should have wrote equipment down here too, because that's a common asset. So we write this down on paper every morning so we don't get confused. Asset is coming in, it increases, and credit cash because it decreases. Right, but we don't actually have cash in this equation. We have it on account, so it's an account payable. But let's just work with let's get one side done first. Let's get the asset done here. Let's get the so we know we got equipment coming into the business. What is equipment? Let's figure out what is equipment. Equipment is an asset. Okay. So we got equipment coming into the business, and we know that equipment's an asset and it's coming into the business and increasing, so it would be a debit. Debit equipment, yes sir, ma'am, yes. Purchased $1,800 of equipment. So we're gonna say that's our debit. Debit over here, debit on the left, credit on the right. Equipment, 1,800. Okay. Now we need to have our credit. We need to have our credit here. What would be our credit? Well, on account. Let's look. But what would our on account? On account is in accounts payable, and it's a liability. We owe somebody for it later, right? We got equipment, we paid them back later. So if we look at our DC Adler, well, we just know on account is an accounts payable. Look, we already have that written on our little cheat sheet, so when we're taking our test we don't get frozen or whatever, and that's a liability, and that is going upwards. Because we didn't say this was our first transaction with somebody. We didn't owe them anything, Now we owe them $1,800, so our accounts payable, which is a liability, is going up. So, accounts payable, I know no, we're not going to abbreviate here. We're not going to get lazy. Accounts payable, $1,800. Yeah! We having fun yet? This is fun. We doing the dang thing here. So yeah, $1,800. That's the June 3rd. That's our debit equipment for $1,800. AP, accounts payable for $1,800 is the credit. All right, guys, gals, let's go for the third one here. Our third one. Okay. We having fun? Thinks I get it now. Cool, man. We're getting it. We're getting it. Hold on one second, guys. I gotta put something. Yeah, we're having fun, right? Whew. I gotta put a shirt down. I'm sweating here. Sweating in the accounting studio, the lab. The lab and cab in California here. Well, we in Florida. Yes, sirs, ma'ams. Okay. Hey, we got 17 people in chat. What up, what up? We got Rocksmith, we got Australia, we got Philippines, we got all over the world in here. Where's everybody from in this bit? Okay. Could you give me a like, please, if you're in here watching? Give me a like. That's all I really ask. Like, share this with people. If you really, Puerto Rico, that's what's good. If you really want to, you could do a Streamlabs donation. You could have merchandise on Teespring. Canada, you could do a super chat. We could do whatever you want here. New Mexico, that's what's good. What's good with it? Yeah. All right, we gotta go. We're on the third one here. So what are we gonna say here? What do we got here? Now we got paid $360. Okay, finally we have cash again. Okay, paid $360. Now we have all right. We've got some different answers here. What's an audit trail? I guess it's just off the top of my head, it would be just following the transactions, following the money. I don't know, the trail that they watch. Let's see. We should all know this. This is paid $360. Okay, so we have some cash. We have some cash in the equation. Let's take care of that first. Do you have it coming in? Do you have the cash coming in or leaving the account? Good, I'm always glad to help everybody. Do you have cash coming in or leaving from the account? What do you guys think? Okay, we have cash leaving the account because you paid it. Now, let's go to our DC Adler cheat sheet here. Cash is an asset. If it was increasing, we debit it. But cash is decreasing, so we're going to credit it. Okay, how much? We're going to do cash $360. That's going to be the credit. Okay. Cash $360, the credit. Now, why did we pay? Why did we pay $360? What did we pay $360 for? Premium for a 2-year insurance policy. Okay, so we paid for 2 years. So we paid right for 2-year insurance, we upfront paid them, right? Well, now we need to get our debit. I would say that's a prepaid. We prepaid for 2 years for 24 months. So that would be an asset because we're prepaying. We have that in our we've prepaid and stuff. Yeah, it's a prepayment. So that's going to be an asset. Okay. Now so we got that, we got an asset. Is it going up? Yeah, because think about it, if we didn't have anything on our books, we could put prepayments here on our cheat sheet too. You know, when you're going along with your homeworks and stuff like this, and then you're like, you're not sure maybe what a prepayment is, but you do some research, you figure out what a prepayment's an asset, then you just put that in with your cheat sheet. So then you make your cheat sheet in like 2 minutes every morning, and then you got it. Right? Prepayments, positive asset is a debit, exactly. So it's a prepayment, prepaid insurance for 360. That's going to be our debit, right? DC Adler for the win. And what I really like about the DC Adler and just working with cash and stuff is at least you start rocking with the cash and you got half the journal entry. Oh, 360, yeah. You got half the journal entry, right? Debits equal credits. So 360 equals 360. So you're just kind of wondering about this, but you just read the question and get it. And it's really a lot of practice. Practice, 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 practice. Okay, now let's go to the next journal entry here. What do we got here? Purchase office supplies for cash. $300. Okay. Do we have it? What I always like to do, and I guess I would say I'm an advanced accountant guy. Do we have cash in here? Do we have cash? Oh no, I mean you can use it for complex as well, because complex accounting, it always works off the basics, where no matter how complex anything is, like for journal entries especially, no matter how complex it gets, you're always going to have debits equal credits. And this has been for 500 years right here. So this is not going to change. You're always going to have debits on the left, credits on the right. That is never, ever going to change. For a journal entry, never going to change. Debits are always going to equal credits. Always, always, always. And the debit or the credit is always either going to be an asset, a draw, an expense, a liability, equity, or revenue. No matter how complex or how simple it is. All right, we've got some I think some banks do flip them around. You've got to the big I totally get what you're saying, Rocksmith. I think I might have done a video on this before, but you have to forget about other things, like how the banks do it, how your bank statements do it, how your credit card statements do it. This is, unfortunately, not everybody follows the accounting rules. So this is accounting. This is its own little thing. We're not thinking about, forget about what your bank does on the bank statement, because that's something totally different. Okay? So yes, we have cash. Purchased office supplies for cash, 300. So we have cash leaving. Okay? What is cash? Cash is an asset. Cash is an asset. If it was increasing, we'd debit it. But the cash is decreasing, so we'd credit it. So let's credit that. Let's credit that cash for 300. Okay. Now, office supplies. Office supplies is kind of weird. That's going to be an expense. I mean, I guess you could because the office supplies might last longer than a year. So you could have it as an asset, but we're going to say it's just an expense. But even if it was an asset or an expense, well, you would have to know it would still be a debit. But we're gonna say it's an expense, right? Because it's an outlay of money necessary for the business. So office supplies an expense. Boom. Is your expense going up? Yeah, by 300. So it's a debit. Look, and we know we need a debit. So after doing these journal entries for a long time, you're just gonna know. So it's office supplies, 300. Hey, we getting lit in here. I got the most people I've ever had in a live stream. 23, doing accountant homework. That's what's up. Thank you for everyone being here, playing along, all that good stuff, man. Okay, now it looks like, oh man, we got kind of a toughie. We got a little toughie here. All right, so I know everyone's going to do great on their first exam because of our work here and stuff, and with DC Adler. There were 24 before. That's what's up. Dang, 24. That's the most I've ever had for accountings and stuff. That's what's goody. So I know everyone's going to do awesome on their exams. So, Lego. Now we've got the next one. Okay. Woo. Purchased a new computer for $7,500. Paid $1,500 cash. Agreed to pay the remainder in 30 days. Computer. We've got Samurai. I think that's probably going to be it. How did you come up with that? Yo, this is really going to help your first test. That's why we're doing this. This is really going to help you if you have a test coming up. It's solely going to help you. Yeah, Samurai, I believe you are correct. How did you get that? Let's see. Let's say I mean, it's pretty straightforward. All right. I mean, we're just gonna go how I would do it if I'm starting and if I'm beginning. Okay. I usually do start with cash, but well, let's start with the cash here. You paid $1,500 cash, okay, and agreed to pay the remainder in 30 days. So that's going to be $1,500 cash. Now, cash is an asset. If cash was going up, we'd debit it, but we're paying it, so it's going to be a credit. All right, debit and credit over here. Debit, credit. We're going to use our DC Adler. We have cash leaving the business of $1,500. So we're going to say cash. So that's a credit because it's leaving. And agreed to pay the remainder in 30 days. Well, what are we getting? We're purchasing a new computer for $7,500. Okay, so we're getting a computer of $7,500. That's what we're getting into our business. What's a computer? Computer is it's an asset. It would be like equipment. So we're getting we can just say computer. It's going to be an asset. So we're going to say computer is an asset. And that's going up in our business because we're getting it. So 7,500 is in the positive form. So we're going to say computer. $7,500. And that's an asset. So we got debit of $7,500. We've got cash of $1,500. We know that debits always got to equal credits. So what's going on here? So, we need $6,000 over here. Why do we have $6,000 over here? What is that? Okay, we agreed to pay the remainder in 30 days. So we owe somebody money. Accounts payable. All right. So if the 30 days was 2 months, it wouldn't make a difference. It should be equipment. It could be equipment. I think as long as you know that this is an asset, as long as you go down, so it's in your general ledger and everything as an asset. Let's not get too picky about that because we know what it is. Okay, we're gonna get rid of that cheat sheet here. Got a little sweat here. What do we got? We got 1, 2, 3, 4, 5 left here. 5 left. Let's go. Let's get it. Can we do 5 more, guys? Next one. Next. All right, your boy getting fired up here. Build student Fiona Smith. Man, let's get this here. Bop. Debit. Credit. Build student Fiona Smith for $40 tutorials that were performed. Build? That means she didn't pay? God dang it, Fiona. Fiona, why don't you pay me up right now, girl? You're welcome, Thomas. What, accounts payable, or did you say? Oh, we're on this one. Okay, service revenue or accounts or well, no. See, Schmliz, you have it reversed here. Well, let's just think about this logically here. Now, I usually we don't have cash. I billed a student, so instead of her paying me cash, she says, "Hey, I'll pay you back when I get the money later." Great, thank you. So that's an accounts receivable. So we have an accounts receivable going up. What's an accounts receivable? Let's go to our little cheat sheet, our DC Adler. Oh, an accounts receivable is an asset. We have an asset going up. Does that make sense for everybody? No, it wouldn't be an accounts payable because you're always thinking of as the business owner. And so as the business, you're not thinking as the person when we're doing this. This can be confusing, but that's why we're doing this together here. Let's start with, what do we do? Let's start, it is an accounts receivable, yes. Maybe if that's confusing, whether it's an accounts receivable, accounts payable, let's go to the top here. And Professor Quark opens his own company, Electronic Tutorial Services. So I have a company that does tutorial services. I perform tutorial services for $40. So that's my main source of income. That's one of my income source revenues. That's my main source. So that's going to be a revenue. Right? $40. How did I get this $40? Or how did I make that? Because of tutorial services. That's my main income. So let's go to our cheat sheet. What is income or revenue? That's a credit. Is that going up? Yeah, because we performed revenue, and we're getting 40 buck. So that's going to be our credit. So our credit's going to be $40 revenue. Okay? Now, you got to think, now let's think, hey, you build the student. But let's just say in our head, what would usually happen if we got cash for this? If we got cash, that would be, you're thinking, oh, cash increase. So you would usually have, for every service revenue, it would be cash $40, revenue $40. But we didn't get cash. We got, they're going to pay us later. What is when someone pays us later? That's an account receivable. Okay? Is our accounts receivable. Let's go to our cheat sheet. Let's go to our cheat sheet that we have down. That's good practicing stuff. Thank you. I think this is really good. Let's go to our cheat sheet, because when you're on, and you've been writing this every morning, so when you get to your test, you can just have a little brain drain and write your cheat sheet out in probably it would take about a minute. And then you don't have to get flustered on your exam. You're like, I don't know. Oh, I don't know what account receivable. Well, you have it right here. Account receivable is an asset. Is your account receivable account going up? Yeah, it's going to go up by $40. So that's going to be a debit. So that's going to be accounts. I can't ever respell receivable, I-4E, or well, I don't know. Who cares, right? Accounts receivable, 40 buck. Does everyone kind of get that? All right. Everyone's kind of a beginner. I'm a beginner. Hi, everyone. What's up, Durrell? Durrell, what up? I first. I second. I third. Let's go. We got 1, 2, 3, 4. We got 4 more. I'm kind of feeling like I'm in the zone a little bit now. I'm zoning, man. I'm in the flow. Let's just knock these 4 out, okay? All right. Now, we got debit. We got credit. Oh, man, they're asking us for previous stuff here. Paid for the equipment purchase on June 3rd. What was our June 3rd here? Our June 3rd. It's fun when you get them right, huh? I know. All right, paid for the equipment purchased on June 3rd. Well, let's do the cash first, okay? Because we know, okay, June 3rd, purchased 18. So we bought equipment. We had an accounts payable because we owed them. Okay? So we got it. The journal entry there was equipment 1800, accounts payable 1800. We got it. That was our journal entry for that. We got equipment, and then we said, hey, we'll pay you back later, bros. So now we finally got some money. Yeah, man, this is for beginners. This is really good practice here. I know what you mean, Lauren. Have a good day. Have a good day. I know, that's why I do these at home, because I don't have unlimited data, man. I'm sorry. All right. So, paid for the equipment of $1,800. So we have cash leaving our business or decreasing our business of $1,800. What's cash? Let's go to our cheat sheet here. Let's go to our DC Adler cheat sheet. Cash is an asset. If it was going up, it would be a debit. We have cash leaving, so that's going to be a credit. So our credit's going to be cash, $1,800. Okay. Now, let's go to what's our debit then? They have to equal, right? Now the person we purchased from, it says on it, wait, how do you know it's cash? Paid for the equipment. That's how we know it's cash, because how else did you pay for? Cash. We finally paid for the equipment. It says on account. No, because that's on June 3rd we got it on account. On June 3rd we said, hey, I'll pay you later for it in accounts payable. Now we're paying for it. We're saying, hey, that account's payable, we're paying for it now. So we did have an account, it was an accounts payable. Yeah, debit accounts payable for the win, right? You are correct. Because that was the old one. So if we owed, we'll say we owed Jim. No, we're not going to debit equipment because we're not getting more equipment. Think about that, because that would be, if we debited equipment, that would mean that our equipment is going up. We're not getting any more equipment. You got to think, hey, we owed some, let's say we owed Jim, I don't know why I picked Jim, but anyways, we owed Jim $1,800, which was an accounts payable. We just paid Jim back. So the accounts payable, and that's why we just had an outlay of $1,800 cash. Why did we just spend this? Because we're paying Jim back for our equipment. Okay? Now, when we originally had that, it was an accounts payable. But now, an accounts payable account as a liability, and if it was going up, it would be credited, but it's going down. We're decreasing the accounts payable account from 1,800 to 0. So, if a liability is going down, it's going to debit. So we're going to debit accounts payable. For $1,800. And that's going to be our journal entry here. Lit! Yay, what I said! Yay! Alright. Yay, what I said! Hey! Okay. Okay, now, let's go to the next one. We got 3 more here. 3 more. 3 more, peeps. I know we can do this. 3 more. 3 more, peeps. Read up. I said same thing. Hey, be nice, everybody. Nice and positive, everybody. Everybody's at different levels, and we're all trying to do our best here. So that's what I always say, like, just do your best. You know what I'm saying? I'm having fun here, right? Hey, we having fun. We getting lit. I know I see my Australian dog, my Australian buddy's got a little bit of zest to him here. Man, we getting lit today? We're getting lit in this live chat today, huh? I need more and more practice. That's why, dang, Christian, you already up in it, bro. Yeah, that's what it is. More and more practice, because, you know, like for this one, I just know what it is. You're gonna debit cash for 35. You're gonna credit service revenue for 35. I just know that because I just have done so many of these. I know that revenue is a credit and we're getting cash, that's a debit. But we'll go. That was kind of silly. I'm sorry I told you the answer before we started. But we've already kind of done one of these. But Bert Bantrim is a new student. We received 35 cash from Bert for tutorial services performed. So this is just basic. We performed a service, our main service, and he paid us cash. Great. Let's just go into the cash. 20 in chat. Can I get a like from everybody, please? Can I get a like from everybody? Hey, and why am I not moving this over here? I'm an idiot. Okay. Let me get a like. Like, comment, share, subscribe, all that's good stuff here, peoples. Thank you for our last 3. Let's give an applause. Thank you, give an applause. Received $35 cash. Oh, all right. So we got cash in here. Let's do that. Received 35 cash. What's cash? Let's go to our cheat sheet. Even though we know this by now, we're just going to go over here because we've been doing our test for 45 minutes now and our brain is just shot and we just don't know anything at this moment. Okay, cash is an asset. We received $35 cash. Our cash is going up. It's going to be a debit. All right, we're going to debit cash for $35. Everyone in here is good with that, right? Everyone should be good with how we've got $35 cash debit, right? Hey, 23 in chat, us was goody. But everyone is okay with that. I'm sure, right? Because how we got the cash for $35, the debit cash for $35, everyone's okay with that? That's kind of what I harp on is getting the cash done, knowing the cash first and all that. Okay. So we're good with that. So look, we have half our journal entry just by knowing how to do the cash. How did we get the cash? We did tutorial services, and look up here, that's the main thing of our business. So that would be revenue. Okay. So we got revenue of $35. And even if you didn't know that, how did we get that? Well, we know it's revenue. Okay. And revenue is going up. Yeah, it's going up by $35, so we'd credit it. Credit revenue. Stole it. You stole it? Hey, Easton stole it. Revenue $35. It lit. I mean, I think this is they don't really get much harder than this. Class is popping today. This test makes you feel smart. Scott, you are smart. Do you know the DC Adler? I'm telling you, like, if you have, that's why I always say have this cheat sheet, because then this is going to be good for every test ever. What happens if cash gets stolen? Where do you record that at? Well, that would be something different. Why do you want to donate? You want to donate some cash to this chat, and then we'll figure that out. We'll do a journal entry for that, okay? Streamlabs or super chat, greatly appreciated if I'm helping you out. If you can't do that, if you can't do that, I understand. I know how it is to be broke as a joke. We can just give me a like, share, comment, subscribe. Okay. We got two more. Dirty G, that's a draw. Dirty Jizzle's up in the chizat. Dirty Jizzle. We got two more. All right. We got about 9 minutes left for an hour. We're gonna let's see. We're gonna go. Debit, credit. Okay. Student billed on June 10th pays the amount to Quark. What was June 10th? Oh, she finally paid in 20 days. Took her 3 weeks to give me that $40. Gosh. Thanks Fiona for taking 3 weeks. But anyways, she pays the amount to Quark, which is our business. So we do have some cash coming in. The $40 she's finally paying. So, what would be our debit, fam? Fam, what would be our debit? Right, and for the free, Rocksmith. Don't forget about that. This is for the free here. We got a certified public accountant giving his knowledge out for the free. You might just have to watch an ad or something here and there. If you would like to donate, I would love that. But we don't. It doesn't matter too much. I do love helping people. So yeah. Okay. Saburai, you smart. Shimliz. No, an accounts receivable, it would be going down because Fiona did owe us $40, but now she doesn't owe us anything. So you went from accounts receivable at 40, now accounts receivable is 0. So accounts receivable is going down. Accounts receivable is an asset. And if the asset was decreasing, it would be a credit. But we just went with that's how we'd get the credit, the accounts receivable. Because student paid on June 10th, finally paid. That was a $40 accounts receivable because she said I'll pay you later. So when someone's going to pay you later, that's an accounts receivable. Okay, now they finally paid. So we had an accounts receivable, which is an asset. Asset going down. Accounts receivable asset. Asset going down, you would credit it. Assets equal liabilities plus equity, right? Well, because the accounts receivable is going downwards because the person who owed you money doesn't owe you any money anymore. Hope that makes sense. What would be the other side? Well, we know it's $40, right? We know it's $40. The student billed pays the amount, so we're getting our money now. So it's going to be cash, $40. That's the debit, and the credit is accounts receivable, $40. Cash goes up, sweet, yeah. Dude, Rocksmith, you got it. Positive cash means positive debit, sir. Let's go to our last one here. Let's go to our last journal entry of the day here for our class. You guys are doing really good today. Thank you, okay? Yeah, I meant to say that. Hey, I meant that. Debit. Credit. Quark withdraws $500 for personal use. Alrighty. Do we have cash leaving? Or do we have cash? Yes, we do. What's the cash doing? Leaving, because you withdrew it. So we have cash leaving. What's cash, everybody? Someone tell me what cash is. So Kristen, you say cash. What is cash? Is it an asset, draw, expense, liability, equity, or revenue? You probably have it written right down here. Cash is an asset, yes. Do we have cash withdrawing? Do we have cash coming in or leaving? Acid? I haven't done that in a while. I'm not in a good mind frame to do it. Asset, yes. Cash is an asset. And if it was increasing, we debit. If it was a credit, if it was leaving, we'd have a credit. So what do we do with the cash? Do we debit or credit the cash? Because it is leaving. Thank you. Yes. Use coins. Cash because asset going to credit cash because it's going down. Thank you very yes, exactly. We credit our cash because it's going down and leaving. Now, for personal use, Quark, he's the owner of the business and he's withdrawing for personal use. What the heck? Where's a withdrawal? Where's a withdrawal? Rocksmith, you don't understand that one? Anything, where's a withdrawal? Let's go to our cheat sheet. Oh, withdraw right here. We know that's going to lessen the equity. Oh, withdraw. So that could be, now our withdraw account, let's say this is our first withdrawal we ever had. Withdraw is 500. So it's increased, our withdrawal account's increasing. If our withdraw account is increasing, we would debit it, correct? Yeah. So we're going to say withdraw. $500. All right, everybody. Did everybody have fun? We did what we does here. We went almost an hour. Hope everyone had fun today. We had a pretty lit chat. Have more people in here than I do for my push-ups. I'll be doing some live push-ups in about 3.5 hours. I'll be doing some push-ups. Oh, you're welcome. Did everybody learn something here? See, it's just really lots of practice with using DC Adler. I'm telling you. Oh no, you're not interrupting. We done, man. Channel has helped me a lot in my studies. I'm a freshman taking account in the Philippines. You are so welcome. Will this channel prepare me for the CPA? Yeah. I mean, I started using the DC Adler when I had to pass a section of the CPA, and I am a CPA, strongest licensed CPA in Florida. I still use DC Adler. Next topic, cost of good manufactured and income statement. Oh, possibly. We're gonna go. There's another question. There's one more question on this little thing. So we're gonna do a test, another test tomorrow morning. Be waiting for that accruals video. Yeah, that the accruals video is coming up. It's gonna be a super simple video, but yeah, it'll be coming up. I'll be here. That's what's up. That's what's up. So I was just showing, I really think as a beginner, as anybody, but especially as a beginner, if you're just starting, you want to write debit. You want to write DCA, either debit, credit, asset, withdrawal, expense, liability, equity, revenue. You want to write these down, and then you want to write common pieces of the what goes in each of these buckets. You want to write that down, and then if you're doing your studies, and you're like today, like today we had a prepayment. You weren't really sure what a prepayment was. You were doing your homework, and then you found out through doing your homework that a prepayment is an asset. So you just start writing that. So you're like, okay, I want to remember that. So you start writing that on your cheat sheet every day under assets. And then that's how I would do it. So then when you come across it in a test or something, you have it over here already. Can you get some questions that involve equity? Yeah, we're gonna do a bunch of questions, a bunch of different stuff. Like retained earnings or shares. Yep, we can. We can do all that stuff. We're gonna do it all, man. We're gonna do it all, bro. All right, but anyways, we've been going live for an hour. I appreciate everyone in here. You can rewatch these. You can watch my other 100 videos, 101. I have 101 basic accounting for beginners. My brain's feeling a little shot right now, but until later, this is CPA Strength, and thanks for everyone for watching, and I'm out of here. I'll talk to everyone later, okay? Have a great day. Keep practicing. It's nighttime here, so good night. Okay, down under, put some shrimps on the barbie. I'll put some shrimps on the barbie for you. We's out. Let's go. Come on. Man. Oh, we're having some technical difficulties.